When we usually sit down to break down an earnings report, we're looking for small beats. We're looking at the decimal points.
Right. Did they beat by 2%? Maybe 5 if it was a great quarter?
Exactly. It's usually about steady, predictable growth. But then you have what happened yesterday, February 2nd. I was watching the Palantir numbers come across, and I honestly thought my data feed was broken. I refreshed the screen.
It looked like a typo. It really did.
It's a company that's been around since 2003, so this is not some small startup, and they're growing revenues 70% year over year.
At a multi-billion-dollar scale. It just defies financial gravity. Normally, you see this maturation curve. A company gets bigger and growth slows down. That's just the law of large numbers.
But they're accelerating.
They're doing the opposite.
So that's our mission today. We're going to look past the stock price, which, it popped 7% after hours. The traders are happy. But we want to know why this is happening. Why is management using words like iconic and bombastic on an earnings call?
Bombastic is not a word you hear from a CFO very often.
Not at all. So we've got the full transcript, the financial tables, all of it. And we need to figure out if this is just hype or if, as they claim, the software world fundamentally changed.
Well, to even begin to understand it, I think you have to start with what they call the impossible math.
Okay, let's lay out the headline numbers first, just to set the scene. Q4 revenue was $1.41 billion. That's the 70% growth figure.
And for the full year 2025, they're at about $4.5 billion.
But the guidance for 2026, this is where my jaw dropped.
Yeah, this is where everyone's did.
They're guiding for roughly $7.19 billion. That's another 61% growth on top of what they just did.
That's incredibly aggressive guidance.
Yeah.
But honestly, the revenue isn't even the craziest number here. If you really want to know why people are scrambling, you have to look at the rule of 40.
Okay, let's pause there. I hear that phrase, rule of 40, all the time in tech. Can you just break it down for us? What is it and why does it matter so much?
It's a really simple health metric for a software company. You take the revenue growth percentage and you add the profit margin percentage. If the total is 40 or more, you're considered elite.
So it's a balancing act. If you grow at 30%, you need a 10% margin to hit 40.
Exactly.
Yeah.
It's almost always a trade-off. A company growing at 100% is usually burning cash, so their margin is, negative 60%. It balances out. You don't get both.
Okay, so how did Palantir score?
Well, their growth was 70%, and their adjusted operating margin was 57%.
Hold on, 70 plus 57. That's 127.
A score of 127.
That shouldn't be possible. You're saying they're growing faster than almost anybody and they're more profitable than almost anybody at the same time.
It's a massive statistical outlier. In the software world, a score of 60 is considered legendary. 127 is. It's unheard of. This is why you keep hearing management use that phrase, N of 1.
Meaning there's no one else like them.
There's no peer group. And based on a rule of 127, it's kind of hard to argue. They aren't just burning cash to buy growth. The product is just scaling that efficiently.
And what's so wild is where the growth ain't coming from. Because for years, the whole story was Palantir is that secretive government contractor.
That narrative is officially dead. This quarter killed it.
Absolutely. I was looking at the breakdown. U.S. commercial revenue. So American companies, not the government, it grew by 137% year over year.
That's the headline within the headline. I mean, the U.S. commercial business is now 77% of their total revenue. It's just staggering adoption.
But that's where I get stuck. I can go buy ChatGPT for $20 a month. Microsoft has Copilot. Everyone has AI now. So why are these companies paying Palantir hundreds of millions of dollars? What's the secret sauce here?
This is the absolute core of it. You have to get this distinction they're making. The chief revenue officer, Ryan Taylor, used this brilliant phrase, the commoditization of cognition.
Commoditization of cognition. Okay, let's translate that from corporate speak.
He's saying the brain part of AI, the language models, the chatbots, that stuff is getting cheap. It's everywhere. If your company and your competitor both use GPT-4, nobody has an advantage. It's a commodity.
Like electricity. We both have it, but it doesn't make my factory better than yours.
Precisely. So Palantir's argument is that just being an AI adopter is useless. The real value comes from becoming an AI-native enterprise. And for that, you don't just need the AI brain. You need a nervous system to connect it to your business.
And this is where that word ontology kept coming up on the call. It sounds so academic, like a philosophy class.
Let's use an analogy. Imagine the AI model is a genius brain floating in a jar. It's read everything is brilliant, but it has no eyes. No ears, no hands.
Okay, so it's smart but completely disconnected from reality.
Right. So if you ask it, how's my supply chain doing?
Yeah.
It has to guess. It makes stuff up. The ontology is the nervous system. It connects the brain to your sensors, your inventory data, your trucks on the road. It defines what a truck is and how it relates to a shipment.
So the ontology is the map of reality for the AI.
It's the ground truth. And once you have that, the AI stops being a creative writer and starts being an operations manager.
They had that really wild example with Thomas Cavanagh Construction. And I mean, let's be honest, you don't typically think of construction companies as being on the cutting edge of AI.
And that's exactly why it's such a powerful example. This isn't some tech firm in the Bay Area. They went all in. 97% of their employees use Palantir's platform every single day.
97%. That has to include people in the field, right? Not
Okay.
just the back office.
Everyone. And the quote from their executive was just ruthless.
Mhm.
He said, Foundry is now their operating system. And get this, every other software must justify its existence.
Wow. So if a piece of software doesn't plug into Palantir, it gets fired.
It gets deleted. They are literally replacing other software tools by building their own versions inside Palantir. And this is the nightmare scenario for other software companies. Why pay another vendor $1 million a year when you can build what you need yourself in a week?
It's terrifying. It's a story of massive consolidation.
And it creates this incredible speed. I mean, look at the Lear example, the auto tech company. They started with just 100 users, 4 use cases, a tiny pilot.
Right.
A short time later, 16,000 users and 280 use cases.
That explains the revenue acceleration. It's not just new customers. The customers they have are expanding usage like a virus inside their own companies.
A beneficial virus, I'm sure they'd say. But yeah, it eats the other software.
Okay, so that's the commercial side. Construction, auto, total business rewiring. But we have to talk about the government business because building a warship is a whole different level of complexity.
And this is where they're returning to their roots, but in a totally new way. They announced that huge deal with the U.S. Navy, up to $448 million.
Almost $500 million just for shipbuilding and supply chain.
And everyone knows shipbuilding is a critical bottleneck for the U.S. military. We can't build them fast enough. So Palantir comes in with something called Ship OS and a strategy they call warp speed.
Of course they do. But did you see that metric they gave? The one about planning efficiency? That's the one that made me stop.
The 160 hours to 10 minutes stat?
Yes. At a shipbuilder, one specific planning task took 160 hours of work. That's a month for one person. They got it down to 10 minutes.
And material reviews went from taking weeks to less than an hour.
See, that's not just an efficiency gain. That's not making something 10% better. That's a fundamental paradigm shift.
It is. But here's the most counterintuitive part. When you hear we cut 160 hours of work to 10 minutes, what's the first thing you think of?
Layoffs. Obviously, you don't need the planner anymore.
Right. That's the logical fear. But the CTO, Shyam Sankar, brought up this old economic idea called Jevons paradox.
I caught that. It sounded complicated.
It's pretty simple, actually. The paradox is that when you make using a resource super efficient, you don't end up using less of it. You actually use more.
Can you give an example of that?
Think of LED lights. They made lighting incredibly cheap. Did we use less electricity for light? No. We started lighting up everything, our gardens, our buildings, places we never would have before. We consumed more light because it was cheap.
Okay. So how does that apply to building a ship?
Sankar's point was that because the planning work became shovel-ready almost instantly, the shipyard didn't fire people. They added a third shift.
They hired more people because the AI was so good.
Yes. The bottleneck wasn't labor, it was coordination. Once the coordination became instant, they could unlock all this work that was just sitting there waiting to be done.
That is a much more optimistic take on AI and jobs than we usually hear.
A bold claim.
Yeah.
And he says it's being driven from the bottom up. He made this point about innovation from the edge.
Yeah, he mentioned the E4 in Hawaii and the E8 in South Carolina.
Right. And for anyone not familiar with military ranks, we're talking about corporals and sergeants, not generals. They're giving the software tools to the enlisted folks, the green suiters, and they are coding their own AI agent swarms.
The image of a corporal in Hawaii coding an AI swarm to solve a logistics problem, that's just wild.
It's the democratization of defense software. Which brings us to the elephant in the room, the geopolitical divide. Because while the U.S. is doing this, the rest of the West, not so much.
This was the haves versus have-nots section, and the CEO, Alex Karp, was, well, he was being Alex Karp.
He never holds back. But the numbers are stark. Remember, U.S. commercial grew 137%. International
It
commercial,
was, what, 8%?
8%.
That's not a gap, that's a chasm. What's going on?
Karp's argument, and it's a very pointed one, is that the West is splitting. You have America and, interestingly, China, who are adopting this stuff at a breakneck pace, and then you have Europe, which he sees as hesitating.
And he framed it as an issue of survival. He called it a breakout function.
Exactly. The idea that the haves, like the U.S., are accelerating so fast that the have-nots can't catch up later. It's not linear. If your industrial base is on 2020 tech and your rival is on 2026 AI native tech, you're not just less efficient, you are becoming irrelevant.
He even said their standard is to deliver magical implementations that literally change deterrence. That's a heavy claim. Software as a primary factor in national security.
It's a very Palantir worldview, for sure.
It is. But look, magic and deterrence are great concepts, but I always get nervous when CEOs start talking like that. It can be a distraction from the balance sheet. So financially, how strong are they?
It's a fortress.
Oh, okay.
This isn't smoke and mirrors. They've got $7.2 billion in cash and treasuries on the books, zero debt. And they generated $2.3 billion in adjusted free cash flow for the year.
So they have a massive war chest.
Huge. And Karp was asked if they'd use it for acquisitions, and his answer was basically, no. Why would I buy a company with worse growth and worse margins? It would just drag me down.
It's arrogant, but when you look at that rule of 127, he's not wrong.
He's not. They're betting on organic growth, which is being driven by this boot camp sales strategy. This is the last piece of the puzzle.
Right. This isn't the old model of whining and diming a client for a year.
No. The old way was steak dinners and golf for 18 months to maybe sign a deal. Palantir's model is, give us your data for 5 days, we'll build a solution live, right in front of you.
And it's collapsing the sales cycle.
Completely. They talked about a healthcare company that did a boot camp in the summer and signed a $96 million deal by December.
A $96 million deal in a few months.
And an engineering firm saw a demo in the fall and signed an $80 million deal by the end of the year. It's show, don't tell, and it's working at massive scale.
It really feels like we're at an inflection point. I mean, we've covered so much. The rule of 127, the ontology model, the Navy's reindustrialization, the geopolitical split.
It's a lot.
Yeah.
But I think if you boil it all down, the single biggest takeaway is that we are witnessing a bifurcation.
A splitting of the road.
Exactly. You've got companies who see AI as a feature, like a little summarize this email button.
Yeah.
And then you have companies rewiring their entire business, their entire ontology around AI. This quarter's data just screams that the ontology approach is the one that's winning.
It's a huge wake-up call.
It really is. And maybe to leave you with one final thought.
Please.
Palantir loves to call itself an N of one, unique. But if you take their 137% U.S. growth as the new benchmark for what a real AI native company can do, it makes you wonder about the rest of the S&P 500.
What about them?
How much of the software running the global economy right now is effectively obsolete? And how many of those business models are basically the walking dead, just waiting for an operating system to come along to replace them?
Yeah.
And they don't even see it coming.
The walking dead of enterprise software. That is a terrifying and an exciting thought. We will definitely be watching to see who survives.
It's going to be a fascinating few years.
Indeed it is. Well, that wraps up our deep dive into Palantir's Q4 2025 earnings. Thanks for listening, and we'll catch you on the next one.